Hello and welcome back to Explain the Charts. Today is March 14th, 2025, and we're taking a look at Ethereum, ticker symbol ETHUSD. We're going to dive into the current news and how it relates to our charts to provide you with a thorough analysis of where Ethereum might be headed. Let's start by summarizing the recent news headlines. Recent news indicates a mixed sentiment surrounding Ethereum. FX Street reports that staking could be a catalyst for price increases, potentially driven by the Pectra upgrade. However, Cointelegraph warns of a potential falling knife scenario, suggesting a possible 30% crash against Bitcoin. This suggests competition is fierce, especially from Layer 1 blockchains like Solana. Some sources suggest that ETF approvals could lead to large investments and a potential price range of $2,904 to $4,887 in 2025, while others predict Ethereum is unlikely to reach $10,000 in the next year. Now, let's switch over to the daily chart and see how this news aligns with the technical analysis. Looking at the daily chart, we can see a significant uptrend throughout late 2024, leading to a peak in early 2025 around $4,090. Since then, the price has corrected significantly, reflecting the recent falling knife warnings. The most recent candles show a downward trend, with a strong support level around $3,150 being tested and broken. There's a consolidation happening near the $3,400 level, which could act as initial resistance if the price attempts to move upward. The break below $3,150 is a bearish signal, reinforcing the concerns about potential further declines against Bitcoin and competition from Solana. However, the long-term predictions of ETH reaching much higher prices could create buying pressure at lower levels, which could lead to pullbacks. Now let's zoom into more recent price action to see some more details. It's important to show both sides of the coin. Here, we can observe the candles with increased resolution. In this range, we see ETH trading sideways, with significant volatility. The last few daily candles have been red, closing near the lows, and today's candle is also trading near its low. This also shows the potential head and shoulders that formed between November and December of 2024, which also might indicate bearish sentiment. To get a better grasp of the short-term price action, let's move to the 1-hour chart. Looking at the 1-hour chart, we can see a more detailed picture of the recent downtrend. There seems to be support around the $1,860 to $1,880 level, but the bounces have been weak. It appears that the immediate resistance is near $1,920. If we continue to see bearish momentum, a break below $1,860 could trigger further selling, leading to a test of lower support levels. Now, we'll look at the 15-minute chart to understand if a possible reversal could occur. On the 15-minute chart, volatility seems to be the rule, not the exception. We see ETH bouncing from a low of around 1753 up to its current price of 1863. Because of the large swing, it looks like there may be opportunity to long ETH, depending on how news comes in and how other timescales look. However, a small trading time frame is never a good indicator to make long-term trading decisions. Let's switch back to the daily to reiterate the important support levels and price predictions. It is important to note that any predictions are solely my opinion and should not be considered financial advice. In summary, Ethereum is currently in a precarious position. Short-term, the falling knife scenario seems more likely, with a potential drop to $1,860 and possibly lower. However, long-term projections and staking catalysts could provide some support and potentially spark a bullish reversal. Keep a close eye on the $1,860 and $3,150 support levels. A break below $1,860 will likely accelerate the downtrend, while a sustained hold above $3,150 might indicate a bottom. The Pectra upgrade and any positive regulatory news could act as potential catalysts for a bullish reversal. We'll continue to monitor these developments and provide updates in future videos. Thanks for watching Explain the Charts.